Hello, we are here presenting analysis for the three corporations that we did valuations on and ratios. The three companies that we chose were Honeywell, UTX, and Boeing. The first question is, who are the major shareholders of these companies? It seems that all three companies had one thing in common. They had Vanguard as one of their top shareholders, but also there was BlackRock, SPDR, and major banks. Second question is, why do investors care about the cost of capital? The cost of capital refers to the cost of making an investment. So it's basically the opportunity cost. Investors are really intrigued for this because if they could get the most for their return, it would increase the value of the firm. So that is why they care about the cost of capital. From my research, the Boeing's WACC, which is the weighted cost of average, was coming in at 17.02. Optimal was at 15.55, which gives them a 1.47 buffer zone, which I thought was the best choice between the three companies. The third question is, what is the cost of debt financing? This involves the pre-tax debt and also the after-tax cost of debt. This is calculated by the risk-free rate times the default spread, and you can also get it by the weighted yield to maturity times the treasury. Honeywell came in at 3.35 pre-tax, Boeing came in at 4.55, and UTX came in at 3.79. The cost of debt after tax, which is subtracted by the tax rate, is 2.55 for Honeywell, and Boeing was 1.64, and UTX is 2.79. Again, in this aspect, I would choose Boeing because they seem to be gaining more from tax benefits or tax relief.
The fourth question we had to answer was, what was the cost of equity financing? And for all three companies, we used the CAPM analysis to figure out the cost of equity financing. And for Honeywell, it came out to 7.66%, UTX came out to 9.84%, and Boeing came out to a whopping 17.75%. And the company we chose as the best one that we preferred was Honeywell because it changed the smallest percentage, and so we thought that was the best choice because equity financing is pretty important, and Honeywell experienced the lowest percent change to make it an optimal capital structure. And then the fifth question was, what is the overall cost of capital? And this is the WACC, and Honeywell came out to 6.91%, UTX came out to 7.82%, and Boeing came out to 17.02%. And now we chose Honeywell again because it was the lowest WACC compared to UTX and Boeing, and so with WACC you want to make it as low as possible to lower the cost, and Honeywell was the lowest at 6.91%. The sixth question is, could we lower the cost of capital by changing our capital structure? And the answer is yes. And UTX, we lowered its WACC by 0.95%, and with Honeywell we lowered it by 0.16%. And by Boeing, we lowered the WACC by 1.47%. And so with that, we preferred Boeing because we were able to lower the WACC by the biggest percentage. Thank you.
All right, so question number 7. Would debt create more unnecessary risk? Yeah, too much debt or too little debt can always be bad for a company. All three companies' optimal rate of debt is higher than the company's current debt. The company with the smallest variation of change of debt is UTX at 30.25%, but they also have the highest optimal debt rate of 60%. Boeing and Honeywell have a wide spread of 45.45% and 30.25% respectively, and UTX has the highest increase in enterprise value and value per share if they were to hit their optimal range. Question 8. How would a financial restructuring affect the value of our company? As explained before, if UTX restructured, they would have the most return relative to reaching all their optimal numbers if they increase debt. What do the other companies compare to? When all three companies are compared to other competitors, Honeywell looks the best. They have the closest ratios compared to their competitors. Thanks. So for question number 10, we chose Boeing because the valuation of the stock price went up a lot higher. The original price was about $344, and then the intrinsic value of the stock is actually $452. So we went with Boeing.